How did Munro Partners determine the liquidity limits for the absolute return products?
Yeah, so for our absolute return funds, the goal is to deliver an absolute return. So downside protection is incredibly important. To deliver downside protection properly, you need to have liquid funds. You can't say you want to protect the downside, but then own so much of a certain company that you couldn't possibly sell it even if you wanted to. And so from our point of view, what we've said as our liquidity rules is that 80% of the fund has to be able to be sold within 10 days at 30% of average daily volume. So we think at any time, our fund, 80% of it can be sold within 10 days. And we ultimately think that can allow the fund to deal with many situations. We obviously have other capital protection tools like short selling and put options, but really at the end of the day, sometimes it's just about selling stocks. And we think that 10-day period really provides investors with comfort that the fund will never find itself stuck in a position that it can't extract itself from if the world did change dramatically overnight.
What are the long-term repercussions on capacity with these liquidity limits?
Yeah, so ultimately with those liquidity rules, the fund eventually is capacity constrained. So as it sits at the start, as it sits today, we launched this fund with $20 million, and we now have just under $5 billion in assets under management across our absolute return strategies. And over that period, we have never breached these liquidity rules. So the fund has always been 80% liquid throughout this period. And so from that point of view, we're not even close to breaching those periods today. But at some point in time, if FUM continued to grow at this rate, the fund would get to a certain size where it would be detrimental to our performance to raise more assets because we would not be able to fit within those liquidity rules. As we currently sit here today, we think that number's somewhere around $10 billion. It could be higher, it could be smaller, because we don't know what liquidity is and we don't know what stocks we're going to be looking at. But at the moment, it hasn't really stopped us finding stocks to help the fund perform till today. And we still think we've got clear air to that $10 billion number in the future.
Capacity can change. Is it in Munro Partners' interest to increase capacity?
Yeah, so from our point of view, it's important to remember that when we do get back to that capacity limit, it's not really going to be in our interest to keep raising the limit. And the reason why is because the absolute return funds at Munro Partners are management fee and performance fee funds. But the performance fees we earn far outweigh the management fees. And so from our point of view, we've set the funds up accordingly. We're not interested in running all the money in the world at one management fee. We're interested in running the right money in the world to produce the best performance, because it's our performance that actually drives what the staff and the people at Munro Partners get paid. And so from that point of view, when that capacity level does get reached, if it is stopping us from the fund performing, then it is in our interest to shut the funds. And so it's in our interest to monitor this very closely, because ultimately we're 100% aligned with our investors here, and the fact that it is the performance is what actually gets us paid in the long run.